We're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us, and it's being accepted.
Hi, this is the Business Guys doing a little research, and the annual inflation rate last year was 4.7%. The inflation rate annualized for this year is 7.5%. And inflation hasn't been that high since 1981 when it was 10.33%. I know of nobody better to address this issue than billionaire Warren Buffett. He talks about the best investment against inflation. He gives us 2 big tips. Please like, subscribe, and share this video. Please enjoy.
We're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us. And it's being accepted. I mean, it's not, if we get, well, take home building. I mean, the cost of, we've got 9 home builders, and in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day, they're going up, and there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. It's an economy really. It's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they open up. And they can't stop people from buying things. And we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either. And we'll wait for 3 months or something of the sort. But the backlog grows. And then we thought it would end when the $600 payments ended. And I think, around August of last year, it just kept going. And it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas. And it just won't stop. People have money in their pocket, and they pay the higher prices. And when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nurse just went out of business. I mean, and nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts to get the place where my wife goes. The small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, same source sales of Dairy Queen are up a whole lot, and they adapted them. But it is not a price-sensitive economy right now in the least, and I don't know exactly how when it shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous, and that's just the start.
Greg, you probably are in a good position to comment.
Yeah, well, Warren, I think you touched on it. I mean, when we look at steel prices, timber prices, any petroleum input, fundamentally there's pressure on those raw materials. I do think something you've touched on, Warren, and it goes really back to the raw materials. There's a scarcity of product right now of certain raw materials. it's impacting price and the ability to deliver the end product. But that scarcity factor is also real out there right now.
The best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents. And if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. And the best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency.
In a period of high inflation, which particular businesses owned by Berkshire Hathaway will perform the best, and which will perform the worst, and why?
Well, the businesses that will perform the best are the ones that require little capital investment to facilitate inflationary growth and that have strong positions that allow them to increase prices with inflation. And we have a candy business, for example, and the value of the dollar since we bought that candy business has probably fallen at least 85%, I would say, 80 to 85%. And that candy business sells 75% more pounds of candy than it did when we bought it, but it has 10 times the revenues, and it doesn't take a lot more capital. So that kind of a business, any business that has enough freedom to price to offset inflation and doesn't require commensurate or huge investment to support it, will do well. Businesses like our utilities, which get in effect a bond-like return, but require, if you're going to build a generating plant, it costs twice as much per kilowatt hour of capacity, and all you're going to get is a fixed return, and yields on bonds go up, perhaps dramatically if you get high inflation, is not going to do that well in an inflationary period, just because it has certain aspects of a bond-like investment, and bonds generally are not going to do well in inflation. Charlie?
Well, but like our insurance operations, our capital-intensive railroad business is certainly one of the best railroads in the world, and our utility operations are certainly one of the best utility operations in the world. And so it isn't all bad to be up there world-class in your main businesses.
Our railroad, the government's talked about building a high-speed rail system in California. I think they're talking about 800 miles of track, and their estimated cost was about $43 billion, and estimated costs on constructions of things like that go up dramatically, much more often than they get reduced even by a minor amount. And of course we paid $43 billion, counting debt assumed, for a rail system which has 22,000 miles of main track and 6,000 plus locomotives and 13,000 bridges if you ever want to buy a bridge. So the replacement value of that asset during inflationary already is huge, and it would grow dramatically, and the world, our country, will always need rail transportation. So it is a terrific asset to own. I'll just leave it at that.
I hope you enjoyed this wisdom on inflation. For Warren Buffett, please like, subscribe, and share this video. This is The Business Guy.